Crypto trading is a high-risk, volatile market. Or at least that's what the news says. But you can't make some significant gains without getting burned. But you can avoid most of the costly mistakes. So, do your research and follow these rules to have the best chance of success. This video is sponsored by EnergyDefi.com. Energy is the future of decentralized finance. For more information, visit EnergyDefi.com. Research about the asset. Before buying Bitcoin or Ethereum, you must research the underlying blockchain technology. Learn about how the public and private key works, as well as the proof of work. There are many free resources online, and Satoshi Nakamoto's white paper with easy-to-understand explanation for these topics. Learn about the crypto regulations in your country. What are the rules for crypto transactions in your country? What do you need to know before buying and holding coins or exchanging them from one exchange platform to another? How does this stuff work with tax laws? They seem complicated at first glance, but have a straightforward answer as long as you ask enough questions up front. So there won't be any surprises later on down the road. Why not contact an expert if possible? They will walk you through every step without getting overwhelmed. Don't overinvest. Having a bit of emergency money in the bank might be tempting, but it's best for your long-term financial stability if you have more invested. This way, if prices go down and there are tough times ahead, you'll still be having some backup for yourself. Never go all in. It's easy to get excited when the price of Bitcoin goes up, but it can come down as well. So if you want to invest in this space, make sure your money works for both sides and never put all eggs into one basket by investing half or less than what you had planned in the first place. Do not day trade. Bonds and whales can undoubtedly influence the market. Therefore, it is not a good idea to trade against them, unless you are very experienced or know what you are doing, because they most likely take advantage of any mistakes and attempt to make profit from you. Do not leverage trade. It's not surprising that people are getting sucked in the high lure of leverage trading, but unless you have experience with this type of strategy, your position will probably get liquidated during a crash and burn period when others are losing money too. Bitcoin, the most popular crypto in terms of market cap, is crashing lately. It's not uncommon for it to drop more than 50% of its peak value in a week or so. But what about if you take into account this asset's whole long-term history? Anyone who kept their Bitcoin for over 4 years would be considered profited by now, because prices have gone up considerably since 2013 when Bitcoin first started trading in exchanges. Don't panic sell. If the prices of cryptos experience a fast drop, unless you are already in significant profit, think about exiting. Usually, whales use this strategy to get cheap coins. Do not fall for the tricks. Also, crypto prices tend to recover after some time. Negative news affect them, but good things happen too. The bankruptcy of exchange or country bans on minings aren't consistent long-term trends as well. Create a realistic profile target. The market is a funny place. It makes your heart race with excitement as the prices of cryptos go up and down. But they also affect how much money we can save for retirement, or whether our investments will be worth anything at all. So remember to create a profit target or an exit strategy for yourself before getting sucked in. Avoid influencer advice. Don't believe everything you read on social media. Cryptos are in the red. So it's no wonder that people want to hear that Bitcoin prices will go up again soon enough. Many want to get clicks and views, so they always attend what people wish to attend. For example, after a huge price drop on Bitcoin, some say Bitcoin will moon tomorrow. Just because many investors whose portfolio are in the red need encouragement for their investments. Control your emotions. You should be happy for others when they make a lot of money. You can learn from other people's experiences and don't get frustrated if you lose some too. It is an ongoing process, so keep at it. Instead, focus on what makes them happy and learn from their experiences, so your future endeavors will be even better. We are not sure what the future holds for cryptos, but we know it has been a fantastic ride so far. If you're feeling down about your investment in crypto, look back. You might get surprised about how much things have changed since 2011. Remember, this is a long-term investment. Don't let any day's fatality ruin the peace of your mind. If you liked the video, please subscribe, like and share, and hit the notification bell. This video was sponsored by EnergyDefi.com. EnergyDefi is the future of decentralized finance, a one-of-a-kind distributed business-building platform that enables the creation of decentralized apps, dApps. EnergyDefi leverages the power of its financial technologies with an incentivized network community. For more information, visit EnergyDefi.com. Thanks for watching.